YouTube, EM Real, right back at you with the next episode of What to Do with a Dollar right after this promo.
What to Do with a Dollar, EM Real.
All right, happy Saturday. YouTube, EM Real, hit the like, hit the subscribe button, and let's get to it. This episode of What to Do with a Dollar is called Keeping Strict Account. All right. Now, what does that mean? You know, last week we talked about, or my last episode, we talked about the 10, the 10, the 10, the 70. That is a disciplined spending, a underpinning, a underlay, or overlay, or blueprint for you and your financial efforts to get better. All right, but you know, we're going to focus on the 70%. Now, 70% is not a cookie cutter. Yours could be 10, 5, 5, and 80. But for this example, let's talk about the 70%. So here's where the rubber meets the road. Keeping strict accounts. And let's start with this. If your outgo exceeds your income, your upkeep will be your downfall. Keep that in mind. So let's get started. So now whatever your percentage is, we're going to say your percentage is 70%. We want you to be able to take care of this goal. Now this goal is for you to live off as least amount of money you can, and then be able to pay yourself with the most amount of money you can. But let's get started. That first point, major point that I want to talk about when we talking about keeping strict accounts is assets. You have to know what your assets are. That's the income. That's the inflow. Now, if you're not happy about your income or the inflow of assets that's coming to you, you got to work on that. But let's start. Income, the asset for most of us have a job. That's an asset. Take a pencil, pen, and see how much you have coming in. Maybe you have a main job. Maybe you have a side hustle. Now, this side hustle could be you deliver pizzas. Did anybody deliver pizzas anymore? I mean, DoorDash or Uber Eats or something like that. You know, you could have some type of side hustle. I don't know. You sit with persons or people. I don't know, whatever you do. You got to write that down. So here's what an asset is. It is something that has economic value or benefit that generates you some type of cash value that can be bartered with. Now, in this case, we're just talking about the physical aspect of you going to work, bringing in a paycheck. But you got to write that down. I need to know. Now, there could be a job. It could be a second job. It could be child support. It could be for men or women. Whatever the income is. Maybe you're getting some type of Social Security. Maybe you're getting some type of income from this area and that area. It doesn't matter. Write it down. Assets. Assets is the number one thing for your financial temperature. How about that? Not only that, before we get to the next part though, this episode of What to Do with a Dollar is brought to you by M&M Taxi Service. M&M Taxi Service. It takes care of your non-emergency and personal transportation needs. It's professional, it's timely, courteous, and they're dedicated to make sure you can move freely to get to where you need to be with a professional overlay. That's M&M Taxi Service. You can meet them or look at their website from www.mmtaxi.net, all lowercase. All right, let's get started. Now, the second aspect of keeping strict accounts is your liabilities. You got to know what your outgo is. You got to know what your outgo is. Now, this one you most definitely have to get a pencil and paper. You got to write this down. Now, keep in mind, this is the discipline part. Number one, you got to write it down. Somehow you need to keep a tab on what you're spending. Number two, you got to separate them, compartmentalize them, what area they go in. Number three, what time intervals do you pay for? Is it a monthly deal? Is it a weekly deal, say for gas? And then we're going to talk about what's the longevity of them, because you don't want to have long liabilities. We're going to minimize that. Now, here's liability. The definition of a liability. A liability is something or a person, for a person or a company, where it owes, usually in some type of sum of money. You owe some money. What is your liabilities? Let's break them down. We talked about this in our 10-10-10-70 aspect or episode. Listen, your general liabilities are your mortgage, your car note, water, internet, phone. You know, these are general liabilities. Most of us have those general liabilities to take care of ourselves. Now, here are miscellaneous things like legal service. I pay for a legal service. You know, some people either do or don't, for speeding tickets and stuff like that. Now, you could be paying for a workout service, or, you know, you go into a gym. You have a gym. You know, this is miscellaneous type of things. You maybe have some hospital bills that you have to pay, credit cards, that type of thing. Not only that, you have things like food. Now, everybody's food is up and down. You spend more than I spend, that type of thing. Clothes. You might have a storage. These are things. You got to write this stuff down. Every month, you need to know exactly what you're bringing, not only bringing in, but it's going out. Listen to this. Also, you even have to consider the liabilities of the charity. This in our couple of episodes ago, we talked about write it down. That's an expense. That's a liability. Your charity you pay, the savings and investment you pay, and even your business expense. You got to write that down. This is the discipline part. So, see, in keeping strict accounts, we're going somewhere with this. Your discipline, you have to know your assets. You've written them down. You have to know your liabilities. You've written them down. And now, here's the biggie. See, we're going to the point is your assets minus your liability is your financial statement. It's your financial statement on a monthly basis. Ladies and gentlemen, this aspect of keeping strict accounts, the bottom line is you got to have your fingers on the pulse of what is coming in, what's going out, so you can find out where you are. So we're getting ready to make financial advancements for you. So today, yes, your homework is, before our next episode, is to write it down. Your assets minus your liability is your financial statement on a monthly basis. All right, ladies and gentlemen, this has been EM Real. We talked about keeping strict accounts, and now this is just part one. We'll be back with you with part two. of keeping strict accounts. Part 1 was your financial statement. Part 2, stay tuned. Ian Real, what to do with a dollar. Hit the like, hit the subscribe button, and we'll be right back with you next week. Peace.
What to do with a dollar. EM Real.